Hi there and welcome to Money Talks, your inside oil on the rural economy as it affects you in the ag sector. In this edition, true or false, it won't be the strength of the New Zealand dollar that pushes us into double-dip recession, but all that dry weather and another big drought. What do our experts think? The sweet taste of victory. Australia loses its appeal to the World Trade Organization. Our apples get the green light to take Australia by storm. And dairy is king in an export-led economic recovery, pushing our annual trade surplus to almost $1.2 billion, the best it's been in 16 years. Should the celebrations begin? All this and much, much more coming up. But first, joining us to tell us all about the latest developments in the markets is ASB rural economist James Shortall. James, what kind of a week has it been?
It's been up and down, but mainly down, I guess. US markets and global markets have been down, and there's no coincidence when you consider what has been happening. There's concerns about what's happening in Europe. There's tensions created in Korea, and there's also been some developments from China imposing new control. So all that's meant is investors are a little bit concerned and have been running back to safe assets.
Of course, U.S. has had a huge Thanksgiving holiday, and we know that this is bigger for Americans than even Christmas. What effect did that have on the markets?
Well, of course, markets were closed, and initially the expectation was that retail sales weren't that good, but they actually came through relatively good. But that was all overshadowed by some of the other factors occurring in the globe, particularly out of Europe, and that's had an effect on all markets, and including the currency.
Of course, the next global dairy trade auction coming up. What are you picking, James?
Well, I think markets have been pretty stable now for a good couple of months, and there's little to suggest that that's going to change. I think some of the dry weather that we have been seeing could have an impact on production, and that I think down the track that could be positive for prices. So I'm not picking that there's going to be significant change in the next auction, but at the same time I've been surprised plenty of times before.
And of course, U.S. prices have eased back because of the feedlot prices. What's going on there? Yeah,
it's been interesting that the U.S. market, and this has probably been developing over the past few weeks, US dairy prices have been pulling back, and especially futures. So butter has been pulling back quite a bit, and that's really impacted on margins for dairy producers in the US. Their feed costs have been increasing while the milk prices have been decreasing. So that means that a lot of producers haven't been making money, and I think down the track that's going to have an impact on their ability and their desire to increase their production, which would be good news for us here. But at the same time, we haven't really seen those negative influences on milk price in the US come to us here in New Zealand, which is positive.
And dairy cow slaughters are up as well. What's behind that?
Yeah, well, the key reason being that it hasn't been that profitable for dairy producers in the US through part of this year. Even though we've seen good milk prices, then it hasn't been totally profitable for them. So through 2010, there have been more cows being put to slaughter. There have been some programs by some of the co-ops to get more cows off the feedlots, that sort of thing. So dairy cow slaughter has been up, and that has also impacted on some of the beef industry in the US, but also here in New Zealand. So that trend may continue for a while. And it
may be good news for us, let's face it.
Well, it is good news for us because, while there may be some impacts short term, then long term, if you don't have the cows to milk them, then, that does impact on production, and, we can fill those gaps.
More good news. Sheep prices continue to be quite strong.
Well, yeah, I mean, when we talk about the milk price from Frontier at $6.60, and then we consider what's happening with lamb prices. Export lamb prices have been over $6, up around $6.20, $6.30 for quite a while. So there's not a lot of difference between milk and dairy, and that's something that we have to put into context sometimes, because the story for lamb is also very good. International prices right now are about 70% higher than the long-term average, which is phenomenal out of the UK market. So the outlook, for international prices for lamb is really good, and it's supported by low supply, and that's not going to change soon. So we're positive about the outlook for lamb. I think prices will drop from where they currently are, but will stay well ahead of what they typically are.
But sadly, wouldn't you know it, this is a year where lamb numbers are down.
Well, exactly. I mean, the two sort of go hand in hand with limited supply. Then that does impact on prices, and unfortunately, there's going to be a lot of producers and farmers there that aren't able to take advantage of those high prices. Some lamb losses have been between 30 and 50%, so that's going to impact on them quite severely. But I think for those that can take advantage, then it should be a pretty good year.
And in 10 seconds or less, you have beef prices firm but could ease.
Yeah, I think the US beef market is looking really strong right now. We've been saying for a few months that it's looking good. I'm still positive about it, but I think New Zealand schedules will ease as the season takes hold. But in general, we're going to see prices 10 to 15% higher than last year.
Thanks, James. Coming up after the break, mixed messages for our economic recovery as the latest data makes the rounds. How good or bad is it likely to be for business in the coming year? And Wool Partners Co-op gives farmers more time to lure them in as they pitch for business and dollars from wool growers for the new venture. But first, answer this in our Farmers' Facts and Figures quiz. What percentage of economic growth is predicted for New Zealand for 2010, 11, and 12, according to the New Zealand Institute of Economic Research? The answer when we come back. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what percentage of economic growth is predicted for New Zealand for 2010, 11, and 12, according to the New Zealand Institute of Economic Research? The answer, this year, expect economic growth of 1.7%. In 2011, look for 2% growth. And in 2012, anticipate 2.9% growth. Joining us now to discuss this and other economic data just in, including the National Bank's new Business Confidence Survey, which says more Kiwi businesses expect next year to be good, is Spicer Senior Financial Advisor Jeff Matthews. Jeff, thanks for being with us.
Hi, Genevieve.
So it looks all good here on the home front. What's the latest data saying to you?
Normally out of a recession you'd be expecting growth of 3 to 4%, and that hasn't happened, and it's not happening in the States and it's not happening in Europe. So it's going to be a lumpy recovery, and so those numbers probably aren't too far wrong. I mean, 2.5% growth.
Apparently, profit, employment, and investment options are all looking stronger. Is that what you're hearing among your client base?
Yeah, I mean, we're past the worst. It's just a question of the recovery is not as robust as people would like, and every couple of weeks there's something that throws a spanner in the works. And we've had the PSA with kiwi fruit, we've got what's going on in Korea. I mean, there's always something in investment markets that spook markets. But generally we're in a pretty good space at the moment, and I think the consumer confidence numbers are up at a 5-month high.
Okay, that's good. James, what do you think? Are we still being a little bit too ambitious, do you think? Some firms are predicting 4% GDP growth. Is that too ambitious?
I think it's pretty ambitious in the near term, just because we are going to have realistically it's going to be a slow sort of growth phase out of what we've seen over the past 2 years. And I guess the latest business confidence survey has provided a little bit of a boost. And really what it tells me is that more businesses now are feeling a bit more confident about their outlook over the next sort of year, and that might mean that they'll go out and employ a few more people, or they'll expand their plant. And they're all things that are good for the economy and good for the economy long term. So if they're starting to feel a little bit better about that, then that might just give the economy a bit of a boost out of it for down the track. But I'm not getting too excited about strong growth anytime soon.
What about double dip recession? Can you see it around the corner for us here in New Zealand?
I don't think so. I mean, there's a chance where we might see a quarter where we might see a negative number, but technically a recession is where we see 2 consecutive quarters in negative territory. So it's hard to see that happening. Potentially some dry conditions or drought could push us around. That could have some impacts where we're in the early stages of that right now.
Jeff, let me put on my farmer's hat. That's very interesting what you say, James, because none of these studies talk about the elephant in the room, which is the weather. I mean, potentially this could be devastating for the agricultural sector.
Totally. I mean, I've got clients who live up north, and I mean, they've been in drought conditions last year. They didn't get much rain during the winter, and they're already into drought conditions now. So I mean, when you're talking about average income for various farmers, it varies enormously. So some places will do it tough this year, no question.
What would your advice be to farmers, James, trying to look forward?
Well, I think they've got to try and mitigate some of the risks to their business, to their farms, and try and put measures in place. We're at a point now where we're not in a drought situation, but it's getting very dry, and there's some measures that they can take. I can't give them the advice on farm, but the advice in their financial world is to try and make sure that they've got the money, talk to their bankers, talk to their advisors, and ensure that they've got the right solutions in place if it does get worse.
Yeah, Jeff, because the frightening thing is that it's not just just getting through the drought. The effects ripple out 12, 18 months down the track. Potentially, what are we looking at?
Slower economic growth. I mean, the one sector that has been positive has been agriculture, and I say anything that knocks, $1 or $2 billion off growth is going to have an impact, right through the economy. It's like a ripple.
Yeah, and the 2007-8 drought cost us something like $2.8 billion.
Yeah, I mean, on farm was about 1.8, and then there was sort of downstream manufacturing of around 800 million. So significant effect, and I think we know we're not in a drought situation right now, but the major producing areas are in New Zealand. Sort of when you talk about the Waikatos, then they starting to get dry. There's no silage has been made. There's no feed on hand right now. They're going down to once a day milking. That's whether we're in a drought or not, then there's going to have a big impact on production for this season, and that's going to impact on the economy. As Jeff pointed out, agriculture has been one of the bright spots for New Zealand, and if we take that out of the equation, then it is going to impact on the communities and New Zealand. And
Jeff, some good news this week for our exports. It looks like our apples have got the go-ahead from the World Trade Organization that the Aussies have to let us in. What do you think about that?
Well, I think it's a positive, but I don't think it's going to be a huge money spinner. I mean, at least it'll be helpful for local apple growers, but I don't think it's, as a percentage of apple imports into Australia, it's not huge.
Why is that? Do you think we could grow the market? I mean, apparently Aussies aren't big apple eaters anyway.
Well, I guess that's the thing, is trying to convince people to eat apples. I mean,
they haven't had any good ones.
Well, exactly. They haven't had any good ones, so how would they know?
And there's talk, obviously, that the apple growers in Australia, because they haven't had a lot of competition, they've been able to, hold the price, relatively high, and all of a sudden, if we start getting some competition on price, then it lowers the price, and people might start eating more. So there are some good opportunities there, but not, as Jeff pointed out, it's not going to be a massive market for us.
Okay, let's go a little bit global now. Let's look at the big picture stuff in the United States of America. It looks like economic data is a little stronger there. Is it good news, Jeff?
It is better news. I mean, it's going to be lumpy because the US still has a lot of issues. It has, government debt, it has personal debt. So all those things are going to take time, to filter through. At the consumer level, consumers have basically paid off about $1 trillion worth of debt in the last 2 years. Debt's still sitting at about 11 trillion, but every bit that improves, that's better down the track. They're saving about 5 to 6% of salary, which they haven't done for at least 10 years. So they're doing all the right things. It just doesn't help economic growth if people are actually saving and sticking money in the bank and repaying debt. It doesn't help when it comes to retail sales or manufacturing.
Although apparently they went